All right. Well, after watching that recording, um, I am gonna go over why I took that trade. Once again, here's my snapshot of my total profit: 447 or 400. Yeah, 447. I ended up closing early. My original target did end up getting swept around 740, but I mean at this point, shy of 500 bucks, I was pretty happy with it. Um, I've had problems in the past where I get too greedy and I'll be up. Um, for example, one time I was up like 2.3 and then let it run to zero. So I am currently learning to take my W's and just kind of move forward with them. But yeah, let's get into it. All right, so coming into the market, we didn't have an SMT. Uh, Although, if you watched my last video, we did talk about this big hourly gap that we've been tapping into and overall respecting bearish movement on the bigger time frame. So coming into market open, I didn't have any bias of market going up or down. I was simply waiting to see what market would do, market would show me, and react off of that. A lot of people will make a bias at the beginning of the market and get tied to that bias, and sometimes that can make or break you. So today is one of those days when we had no SMTs at the highs, no SMTs at the lows, meaning that we were going to wait to see what market would do. So coming into market open, we see here that we end up creating an SMT with NQ only trading up to here and taking our London high and failing to come back to highs from previous week, whereas ES traded way higher and did end up taking some of these highs. It didn't take them fully, but it's still considered a respectable S&T. Also, EYM around this time frame, let me see, we ended up doing the same thing with NYM. So we had a sequential SMT, meaning we had an SMT presented to us within all three indices, aka NQ, ES, and YM. So now with that SMT presented, I was expecting shorts. And although we did get somewhat of a decent setup towards market open, where we created an SMT here with ES or NQ failing to take these highs in the 1 minute time frame, and ES taking out previous highs and then creating a CISD on both of them. Unfortunately, this was a little too quick for me to catch, so what did we do from there? We waited for market to tap into this. Back this up a bit. We waited for market to tap into a 5-minute gap that we created. Which is here. Also, I want to note that on top of the sequential SMT across all three, we were also delivering off our new week opening gap that we created, adding to our bias. Like I said in my previous video, if you have a SMT lined up with an hourly fair value gap that also overlaps with a new WOG, that simply adds to the narrative being a high probability scenario. So now that we wanted shorts, we were simply waiting to tap in a respectable gap, this 5-minute being a sponsored gap since we came off a sequential SMT, delivered off a 1 hour, delivered off a new WOG. So now what do we do? After a high time frame SMT on the hourly, delivering off a new WOG gap, delivering off a 1 hour gap, we jump down to our lower time frame and we wait for a simple cracking correlation and an SMT on the lower time frame. So as you see here, NQ comes up, takes this high. I should probably mark these out. While ES fails too. So now, just look at all the narrative behind my trades, and you just kind of learn this as you go to see it a lot quicker. Sometimes you won't see it when it's happening. It's kind of part of the skill that you gotta develop. So we have how many confluences, right? We have hourly S&T on the bigger time frame. We have 1 hour gap. We have a new walk gap. We have a S&T at our highs at market open. And now we have a S&T within a 5-minute sponsored gap. Now all we gotta do is wait for a confirmation of delivery. Now I didn't necessarily wait for a clear CISD, but at this time ES was already starting to give us the delivery, and so did YM. I mean, YM was just strictly bearish. I mean, this kind of just added to my confluences that there was no other way that the market was gonna go. Didn't get a delivery within the YM now that I look at it, but I was very confident in taking this first doji candle or rejection candle off of S&T in the lower time frame inside a 5-minute sponsored gap. S&T's at the highs, 1 hour high time frame S&T, new wall gap, hourly gap, and overall just bearish structure that we've been respecting for the past couple of weeks. So now that we have these 4 to 5 confluences to take shorts, what are we targeting? We already took out London low. Asian low is all the way down here. This did end up getting swept out, but our next clear draw of liquidity was true day open. If you don't know what true day open is, it's exactly what it sounds like. It's the start of a new day, so midnight. But since all these time frames are based on New York time frame, for us it would be 11, 10, 9 p.m. So our 9 p.m. time frame is our true day open. And yeah, so with this being our entry, the stop with an S&T in the lower time frame being our stop, targeting true day open, we were looking at a 1 out 3.5 risk reward. This isn't my normal style of trading, but since we missed this first initial move, we wanted to wait for the first pullback to a respectable time frame, and simply just straight delivers. Although by here I was already completely out, trailed my stop to this high, got taken out, so I was fully out by here. But I mean, this did end up delivering for the rest of the day. Took a little bit of time. It wasn't any news today, but regardless, the draw and liquidity and the bias was A1 today. I believe this, I mean, in my opinion, this is an A+ setup. But yeah, anyways, let me just kind of make this all into a picture just so you guys can go over it, I guess, or analyze, I guess, on your own. But yeah, that's it for the video. If I go a little too fast, I am sorry, but with time you will understand this terminology, and you'll be able to start watching recaps and just be able to understand them more as you go. But yeah, that is all. Thank you.